In this video, you'll be learning about this topic.
So the real place I really want to start here with the questions is, I'm looking at the landscape of what's taken place. And we're seeing the indices go higher and higher and higher, right? And we know it's being driven by a couple companies, but when you dig into the mid-size, small cap companies, they're just getting annihilated right now. This COVID coming back at Christmas time, this is beyond destructive when you look at what the real economy is beyond those 10 companies that are driving the indexes. So where I want to start is really in the commercial real estate space, because you just can't drive through any town in America without it just being completely boarded up. So when does this start to matter? What are some of your thoughts on the fallout of this commercial real estate and just mid and small cap businesses in general? So I'm just going to throw it over to either one of you guys to just kind of hear some of your thoughts on where some of this might be going.
I think actually you summarized it well, because I think you've been saying that, when everything is in a bubble, it's the currency that's in a bubble. And so I think that's one of the ways to look at it. It also depends on, if we're talking about small companies, it depends on what you're looking at exactly. Because we've seen, for example, a breakout in the Russell, right? So small cap, indices are doing well. But of course, if you look at small businesses, restaurants, not publicly traded areas, those are struggling. And so I also looked at, for example, I've been talking about the backwards square root sign recovery in jobs all of last year, pretty much. And with the latest data point we got with the ADP jobs, we saw the first dip in private jobs estimate since the pandemic. And so commercial real estate, I think it's one of those things where you can put in your value investor hat. I think that there are interesting opportunities there. But the whole broad sector, there's so much change happening all at once. And it's just things that were supposed to take kind of 10 years. We covered that in a year or two. And so it's really challenging. That's why even as someone that really likes to go into unloved areas, I've been mostly avoiding the commercial real estate sector just because I don't feel like I have an edge in there and there's just so much disruption.
I tend to agree with Lynn on that. It's got two things, right? You've got the cyclical / pandemic issues with commercial real estate. And Lynn did a great job documenting those. And I would say that those are almost living by the leave of the government. So it's an interesting thing for commercial real estate, for the banking system, because if the government doesn't do enough, commercial real estate books for banks are in trouble. The commercial real estate sector is in trouble. What is enough? And that it's a political question ultimately. And to Lynn's point, it does, broadly speaking, for me, it's tough to have an edge on that. But then away from the pandemic and the cyclical stuff, you also have this secular trend that was present before of Amazon / internet / e-commerce, DoorDash, where I saw something a couple of weeks ago of Chipotle talking about just basically putting up kitchens, no dining areas, and just the way that these productivity enhancing tools, typically around the internet or mobile devices, are really changing the needs and the sort of the layout of commercial real estate space heavily on the retail side. But between those two things, like I said, I agree with Lynn, where there's probably some interesting opportunities. I would never say no, but boy, it would have to be a niche space with a very attractive cap rate.
One thing I'd add is that the company Brookfield Asset Management of Canada, and I don't know if either of you covered that one, but it's a company that I've covered for a number of years. And they're one of the biggest owners of some of the key kind of high-rise skyscrapers in major cities around the world. So New York, London, different cities around the world. And they've actually been scooping up some of these mall properties and kind of doubling down on some of these distressed industries. And I found that interesting because they actually have a really, really good track record. And the CEO, ever since he's been in place, they've just done phenomenal work. And of course, real estate is arguably their core area, but they also have a big renewable energies business and a big infrastructure business. I've always been more interested in their infrastructure business. That's where I've invested for like a decade with them. But I just found that the fact that they're, they have kind of the guts to go into kind of double down on the real estate side. I just found that interesting because they're not generally dumb investors, but they, for whatever reason, have the confidence to keep pursuing that area and not really backing out of it. And I guess their advantage is that they're well capitalized. So the reason they do so well is because historically they go in when other people are fleeing and without capital. And they have a global mandate. So for example, back in 2016 when Brazil was having a horrible time, they went in and bought Brazil assets and they can always refinance things easier. So they have this really kind of contrarian investing strategy. And so I'm really curious to see if it works out for them, just because, those are the people with an edge and they still seem optimistic.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on the next podcast episode and new investing resources.
What are your takeaways and thoughts on this discussion? Let us know in the comments section below.